back to the Freeway Philharmonic, the podcast that saves you money while you're traveling, or in today's case, your taxes.
Yay.
My name is Mackenzie, and I am a freelance musician in the Chicago area.
Hello, I am Lauren, also a freelance musician in Chicago. And today we have a very special guest on the podcast, Taylor Hampton. Woo woo! Certified tax profesh. So, first off, why don't we just get into who you are and how you got started in this, maybe your musical background as well.
Yeah. So my name is Taylor, and I also am a musician and have a background in classical music. I played a bunch of instruments growing up, like piano and flute, and then I got into percussion in about 6th grade, and that it just took off. And
as it does.
As it does, you all know how it goes. So I did my undergrad at Juilliard and then my grad degree at DePaul, and I've been in Chicago ever since. So
cool.
Yeah, I was in Civic, and I guess I overlapped with Mackenzie. We just
we were in Civic together for a year, which we didn't realize because I don't look behind me.
You're not supposed to look behind you.
Yeah.
Like that's the rules. So
I followed the rules.
So we're here to talk all things taxes.
Mm-hmm.
Well, some things taxes. Just a note for all of you podcast listeners, this is just for educational and entertainment purposes. So make sure you go and consult your own tax professional. Hopefully that's Taylor, but it could be whoever you trust. But just want to preface with that so you don't come at us, okay?
We do bite if you come at us.
That's true.
If you haven't listened to episode 1, that'd probably be a good place to start before you listen to this episode.
It would be. We covered some like general tax things to keep in mind, again, with
very general entertainment purposes only.
We're not professions.
Nice.
So I think maybe the first thing that we should talk about is the distinction between a CPA and a tax professional.
Yes. Yeah. So I think a lot of people assume that I'm a CPA because I do taxes, but I am not. So a CPA is like it's an accounting credential. You have to pass an exam with the state and then you get that license. And CPAs oftentimes do prepare taxes. They all can, but it comes along, passing the CPA exam comes along with other accounting and finance expertise that you have to have, and CPAs can represent you in front of the IRS. Like if you do get audited and you need representation, a CPA can help you, and not every tax professional can unless they have some sort of other accreditation with the IRS, like an enrolled agent could help you.
Cool.
Could represent you in front of the IRS. So it's just a little bit of a distinction there, but both tax preparers and CPAs can prepare taxes, so that's where they overlap. Yeah.
And we kind of glossed over this. How did you get involved in this profession?
In taxes? How did I pivot from classical music to doing people's taxes? COVID, I would say, changed a lot for me because I was living in Chicago. You know, I came here for grad school. I was in Civic and gigging a lot. And then obviously a lot of that halted during COVID, and just a lot of things shifted for me, I guess I would say, during that time. And I thought that tax preparation might be something that I would be interested in because I knew a lot of, just colloquially talking to like my music friends, nobody really knows what they're doing, everyone's confused. It seemed like something that maybe I could like make a difference and help people.
Yes.
So I learned how to do taxes. I took a bunch of courses, learned how to do taxes, and I started working part-time at a tax firm early on, and then eventually started working at a public accounting firm out in the suburbs, that horrible commute that I was telling you about. And I started my own tax business around that time. And then now I work full-time in accounting and I still have my tax business on the side. So that's kind of what happened. Just a pivot.
You like kind of get to see all your old music friends because you do their taxes.
Oh yeah, it's great. Yep, I have a built-in at least once a year. We're gonna have a catch up.
That is so cool.
So it is nice. Yeah.
I was telling Taylor, for our listeners, that I kind of put the feelers out there. It's like, does anyone know a musician who actually knows about taxes in any form. And a few people from my past were like, oh, you should totally talk to Taylor. She's awesome. And I was like, and you happen to live in Chicago. I was like,
yeah, what a small world.
So it's such a small world. Everyone knows everyone else. And again, in our first episode, we said, don't be a dick because everyone in this field talks to everyone else. So
It's another universal trend of this podcast.
Ah, man, we're just sending out some great advice here. So anyway, happy to have you on the show.
A lot around the lines of misconceptions about taxes and tax professionals. What are some of the biggest misconceptions musicians have about their taxes?
I would say, at least with the musicians I'm working with, a lot of whom are like on the younger side, I would say people are surprised at how high their taxes can be when they are self-employed. Because, if you're someone who just has a W-2, usually your taxes aren't really that big of a deal. You're probably not going to owe that much depending on your situation. But if you're someone who's doing a lot of freelance gigs and you're a 1099 independent contractor, that does come with a bigger tax bill. And I can explain a little bit why, but I would say that's like one of the biggest misconceptions is, I really don't feel like I made that much money. Why do I owe thousands of dollars to the federal government? And unfortunately, it is correct that you owe thousands of dollars to the federal government. So that's why it's important to track all of your expenses and make estimated payments and things like that.
Yes.
Yeah.
Estimated payments was something like, again, my husband is like a real person and not a musician. So like he would tell me about these estimated quarterly payments. And I was like, what are those? I was like, I don't know what that is. I don't do that. Do I need to do that? And so, we can talk more about that, but it's amazing how many things musicians do not understand about their own like tax situation, their own like W-2 versus 1099 and what those things can do for you, what the benefits of having one versus the other.
Yeah. And maybe we could get into that a little briefly just to set because I think that's an important thing for people to understand because a lot of musicians have both W-2s and 1099s. So with the W-2, you are an employee and your employer withholds tax for you. So not only do they withhold federal and state income tax, but they also withhold Social Security and Medicare tax for you, which is called collectively FICA tax. So they withhold that, like when you get your W-2, if you look on the side, like, yes, there's income tax withheld, but you also see Social Security and Medicare. So they split it with you. They actually pay, it's 15.3% is FICA. So it's like pretty significant. If you're W-2, your employer actually pays half of that on your behalf. And then the other half, which is 7.65%, they withhold from your paycheck. So you never really see it or feel that you had it.
The sting of it.
Yeah, because it comes out of your paycheck and then it's not like at the end of the year, you're not, unless you're making a lot of money and maybe there's some discrepancies, like generally like, no, if you're just W-2, you're not gonna have to pay back that FICA. But with 1099s, you're paid as a contractor. So generally you're not having any tax withheld from your 1099. So not only are you gonna owe income tax that is not being withheld, you're gonna owe the full 15.3% FICA. And that is called self-employment tax. And that is why you might feel like, wow, I only made so much money. Why do I owe so high taxes? Like, that's why it's the FICA tax.
That is so interesting. Yeah. I'm full disclosure, had no idea that was why. So I'm glad that we're talking about it.
Yeah.
Yes, just educating us over here. Yeah. I mean, it's kind of a wild, wild world. We talked about this in episode 1 about a lot of orchestras now do pay W-2s to you, even if you're like a sub. And
the law is that if you are requiring the musicians to show up at a certain time and have set working conditions, they need to be paying you a W-2.
Interesting.
And I know the CFM is helping Chicago orchestras who are union move over to W-2 if they are still 1099.
So is it technically illegal for them to do that though?
There's a whole thing in TurboTax where if you get a 1099 and this orchestra should be a W-2, you can move it over like, hey, I think this should be W-2 income. And it's totally up to the IRS to follow up if they want to do anything with that. So, and then how understaffed the IRS is.
Okay.
Yeah, probably little orchestra nonprofits are not being scrutinized.
That's fair. That makes sense. Okay, I was just trying to understand sort of the whole scope of how we ended up here with some 1099s and then other things being W-2.
This is also a reminder, because I just did this last week, that if you're in a chamber ensemble and someone cuts you the check for all of your gigs, remember to 1099 the other people who played with you so that you aren't responsible for their taxes.
Yeah, that's a good point.
That's great.
Yeah.
Tax softwares and your trusty neighborhood tax professional can do this for you if you need help with that.
Yeah. And also you could actually e-file 1099s very easily directly through the IRS for free.
Oh.
So if you look up, you have to get a transmitter control code, but it's very easy. Just do it ahead of time because you have to apply for it and it takes them up to 90 days. It didn't actually take that long when I applied for mine, but that is something you can, there's all these softwares that you can use to like pay per form to issue 1099s, but you can do it for free through the IRS. So if you're trying to save money, maybe that's something to look into.
Okay, very cool. Yeah, there's like so much to uncover here. Again, we're just kind of getting people to start thinking about their taxes in this more broad sense instead of just like, I have a W-2, I have a 1099. What?
Right.
So very, very cool stuff. What are some expenses that musicians don't realize that they can write off?
Yeah, so a lot of people are surprised. Audition expenses are tax deductible. That's a business write-off. Yeah, so travel, meals, anything, the hotel, anything related to you going and seeking work, that is a legitimate business expense. And like meals while you are out at a gig, not just audition related, but let's say you have to travel, it's a 1099 gig, then yeah, those meals are all 50% deductible. Lessons or coachings that you paid for. And then there are some times when we'll use the term market research, like if you are going to a performance because they're playing a piece that you're preparing or a concerto or whatever, that could qualify as market research and could be a business expense.
I don't know that one. I'm totally justifying nice CSO seats the next time I have to play.
Yeah, file it away. Yeah, there's some opportunities in like the market research professional development realm. I guess while we're talking about expenses, we'll probably talk about this more, but the rule is if it is related to 1099 income, you can write related expenses off.
Right.
But if you have expenses related to W-2 income, you are not allowed to write that off anymore, unfortunately.
When did that change roughly?
2018 Tax Cuts and Jobs Act.
LOL.
So, yeah, so, and I probably is gonna, I think the Tax Cuts and Jobs Act is up in 2025 this year.
It's up this year.
It's up this year, but they're probably gonna renew. Like, I would say I am doubtful that employee expenses, like W-2 employee expenses, are going to come back. I'm very doubtful, but we'll see. I could be wrong. But for now, you can't deduct anything related to W-2.
I forgot to mention that before I asked you that question about write-offs. If it's a W-2, can't write anything off. 1099 side is where the fun comes in.
Exactly.
You can write off some stuff.
Yes.
Okay, so like and what about like practice spaces? Is that something that you can generally write off?
So that's something, maybe I could talk about a little bit. So
sure.
If you have a Schedule C, the Schedule C is where all of your self-employment income goes. So that would be 1099s or anything that you get paid in, a cash or check. Basically, if you don't get a W-2 for it, it's probably self-employment income. So if you have that, you can claim the home office deduction if you qualify. So for musicians, this could be if you teach lessons out of your house or your apartment, you have a dedicated area for that, or a dedicated practice room or something like that. The thing with the home office, you just need to make sure you actually qualify. So the IRS wants it to be exclusively for business, regularly and exclusively for business. So it can't be like this is my living room and I also put a music stand here and practice sometimes. No, it has to be a dedicated, it doesn't have to be a full room. It could be a corner of a room. It could literally be like, I don't know.
I mean, read desk and
yeah, it could be a little, yeah, read desk and you're sitting there like making your reads or writing in your bowings or, whatever. As long as it's exclusively dedicated to your business, then it qualifies. It just can't be like it's my bedroom and I practice in here, so I'm running off my bedroom. No.
Yeah, right. Yeah. Be honest, people.
Yeah, be honest, because if you get audited, they're gonna want to know.
Yeah.
So and there's a couple ways to claim the home office deduction. The IRS has like you can just take the standard $5 per square foot, which is not bad, or you can do a percentage of your actual expenses. So it's basically like the proportion based on the square footage of what you've paid in. If you're a renter, like, rent, insurance, utilities, or, if you own, mortgage interest can play into it. So, there's a couple ways to take that deduction.
And if you talk to your tax professional, they'll know how to handle it for you.
Yeah, and they can talk you through it and and tell you, like, help you determine, do you qualify? What kind of expenses should you bring in to show me so I can calculate it for you? Yeah, they can help you with that.
It's really cool.
Yeah.
I remember going to a tax seminar years ago where the tax professional said, if the IRS really wants to know what is your home office and it's like the corner of a room, put some duct tape down the floor and say, this is my practice corner, and it is taped off.
Yeah.
That's cool.
Put something, something like something that you can keep with your records to prove, even, anything that you feel like makes it more obvious. Like this, I think the duct tape thing is great because it's so obvious.
Yeah.
This is exclusively for my business. This is the corner. Like, that's a great idea.
I feel like a lot of people do not know that. Like, I don't think that I ever knew that all these years I've been filing tax. I mean, clearly I don't know a lot about a lot, but I would say that one in particular, there's probably a lot of people that we know who, like, what else are you doing with that space? Obviously, like, we're pretty honest about it because, hey, we got to practice. So I would say as long as you have a real dedicated space, which basically everyone does, like, you can write that off if you talk to your tax professional.
Correct. Yeah.
What are some things people think they can write off but they actually can't?
Okay, so I would say the more common ones I get are like, can I write off like massage expenses and like my Theragun and stuff like that?
Right. Yeah.
Which I understand where people are coming from with that, but it's not an ordinary and necessary business expense. That's the rule for the IRS. It has to be ordinary and necessary. So like generally, I don't even think physical therapy qualifies. There might be an argument for physical therapy if like a licensed physician prescribes you physical therapy and it's specifically because of a music injury, then maybe I would talk to your tax professional about that. There might be room. But generally, if you're going to physical therapy and you don't, it's that kind of stuff is going to be a no.
Wishy-washy.
Yeah.
Ambiguous.
So things like that are not as directly related, I would say no. But yeah, a lot of people ask me about like injury related stuff. And then like cell phone, you can't write off your entire cell phone bill. If you use your cell phone a lot for business, like the best you could do is maybe write off the business percentage, like how often.
Would you have to like go through and see how many?
That's the thing is like, if you get audited, how are you going to prove that to the IRS? Like, I don't write off my cell phone bill for that reason. I mean, and I use it a lot for personal. How am I even going to, But there are people like, there are people who you really use your cell phone like 50% of the time for business.
Right. Contractors.
I have a friend who works for AFM where he has his like AFM issued phone and that's only for business. So obviously that's being written off, but then he has his personal phone for everything else. So if you have the luxury of being able to pay 2 cell phone bills,
correct,
you could do that.
That would be great because then one phone is obviously for business. It gets tricky. Anything that's both business and personal, it's tricky, and you just want to make sure you have substantiation for it.
Yeah, the idea of getting audited is terrifying enough as is, and so maybe we should talk about if you have any comments on that, like what, or Mackenzie, the state expert, but like what the process looks like if you get audited. First off, do they send you something in the mail, correct? They don't like contact you like via email or like texting you like, hey girl.
Indiana
you're getting
has an
audited.
online portal to reduce mail, so you get like this email just being like, you have a message in the online portal, and then you go online and there is like they send you a mail copy, but yes, you will get an if you've signed up for any kind of like email alerts about your refund or anything like that, they can email you.
Oh, okay.
But they should send you something official in the mail.
Yeah. Yes. Especially like if we're talking federal, the IRS will always send you something in the mail. But a lot of states too, they have a portal option where like maybe you receive a letter and then you can respond to it online.
Yeah, I had to upload all of my documents through this portal.
Yeah.
Yeah,
exactly like that. So at least it's not like you don't have to actually mail your substantiation anymore. You can usually respond to things online. But yeah, you'll get something in the mail. And it depends on the type of audit as far as what the process is going to be like. So like there are the most simple types of audits are like, hey, we have record that you have a W-2 that you didn't include on your tax return and you need to file an amendment and include it. That's like an easy fix. You have to file an amendment. You're just going to have to pay any extra tax that you would owe plus interest, but it's not a big deal. That's easy to resolve. And then, there are the audits that are like, hey, we want to see substantiation of all your business expenses. And that's where you don't want to be scrambling. You want to make sure you have your records, you've kept your records at least 3 years, keep all your records to substantiate anything you put on your tax return. So that if they do come asking for more information, you have it already.
Okay.
Yeah.
Yeah. I mean, and so that's all again 1099 / like Schedule C stuff, and it's all like the receipts. Is it physical receipts or can you use like a credit card bill?
Yeah, you could use like a bank statement or credit card bill. I do like to keep in addition to the credit card and bank statements, like ideally you're keeping some sort of receipt or invoice. It could be a PDF, save the PDF receipt when you order whatever your reed making materials. So save the invoice or the receipt. But yeah, a bank statement, credit card statements are also good substantiation too, or canceled checks, anything to prove that it has been paid and what it was.
Yeah, I mean, that's pretty clear. I would say it's pretty straightforward. It's just the difficult thing is remembering to do it every time you purchase something. Where I have definitely been like, oh, I don't know where that receipt is. I guess I can't write it off anymore.
Yeah,
so
do it as you go.
Yeah.
I know it's like you got to get into the habit of
Exactly. It is a habit. Build your habits.
Especially if it's an online purchase. I will print the email receipt, but I'll also leave the email in my inbox until after I'm done with my taxes the following year. So if I can't find the receipt or whatever, I know it's somewhere in my email.
Yeah. Another method, I know one of our listener questions is like, we'll get to it, but it's like, how do you keep track of, what you're spending, blah, blah, blah. Another option I have heard people doing is having a credit card specifically for business stuff.
That's ideal.
Okay.
Yeah. If you, from like a record keeping perspective, having a separate business account, like business bank account, business credit card, and keeping everything completely separate, that's really what you should be doing.
Okay.
Obviously that's not feasible for everyone. If you're someone that's like, I'm in an orchestra and have a W-2 gig, and then I take occasional 1099 gigs, like, okay, I get it. You don't, but especially if you're someone, maybe you teach and you have an LLC for that, you're going to get to a point where you should have, you should probably have a business credit card, business bank account.
Okay.
Yeah.
Yeah. I mean, that there you have it, folks.
Yeah.
It makes a lot of sense as long as you can keep everything as organized as possible in one place and the money kind of stays, where it's supposed to. Or not where it's supposed to, but in an easily accessible exchange of like, this is my business money and it's going right to my business credit card, and that's it. I have gone through my credit card statements, just my normal credit cards, and like started highlighting everything that I was planning on writing off, and I don't wish that on anyone.
Yeah, it's not fun.
It's not fun.
No, done that. Also, check your credit card statement, even if you think nothing's up, because I got my number stolen last month and wouldn't have known it if I hadn't looked at it.
Really?
Yeah.
What was the process for getting that fixed?
Oh, you just with Discover, it's easy. You just call them and they'll send you a card.
Oh,
But,
okay.
yeah, it's always good to be looking at your credit card statements.
That's true. That is true. So just to reiterate, I know that we said there's the 2018 Tax Cuts and Jobs Act. Are there some like exceptions to writing off things on the W-2 side?
There are some limited exceptions.
Okay.
So if you want to see all the exceptions, the IRS goes through it on their website very clearly. One of the most common ones would be like certain members of the military can deduct like travel related expenses, like if you move for a military posting. That's an exception to W-2. So there's a few exceptions with specific types of workers where they allow certain types of unreimbursed employee expenses to be deducted. But generally for musicians, it's going to be a no.
Okay.
Yeah, there is. I know we have a question here about qualified performing artists. So that is something, if you think you might qualify as a qualified performing artist, that is one of the limited exceptions, that there are some allowable expenses that you can take against W-2 if you qualify, but most people are not going to qualify as a qualified performing artist. It's a very narrow lane.
Okay.
Yeah.
Is the lane defined by the amount of money you make, or is there something even more specific than that?
In part is defined by the amount of money you make. So specifically, you should look it up if you think you might qualify. There's an IRS, everything can be found on the IRS website. Like all of the tax laws on the IRS website, the language can be a little bit tedious, but if you get used to reading it, it's not so bad. It's a good resource if you're trying to figure out if you qualify for something specific. And this would be something if you're using a tax professional to ask them about if you think you might qualify. But yeah, in part, there is a limitation. So qualified performing artist, one of the requirements is your adjusted gross income has to be $16,000 or less before
like total.
Yeah, adjusted gross income is like all of your income, like W-2, interest, 1099s, less certain deductions on the Schedule 1. But it's like before the standard deduction, so it's pretty much your all of your earned income.
Yeah, not a lot of people are doing.
Yeah, so that's why it's like if you're working full time, 16,000. Some people might qualify for that, but then there are some other, like you have to have at least 2 employers during the year, and you have to have at least $200 in wages per employer for at least 2 employers. And you should look up the specific requirements on the website if you think you qualify, but that 16,000 adjusted gross income is going to knock a lot of people out.
Okay.
So
yeah, no, that's totally fair.
The government thinks we are poorer than we actually are, unfortunately.
Yeah, what if we raise that
ceiling?
It
would be nice for them to bump it up,
Yeah.
That's good to know though. And we'll look for, all the things that we're referring to on the IRS website. We'll link as much as we can find on the website for this, like the post for this episode.
Okay.
And
that would be nice for people to have.
Just like have a resource where everyone can just knock it out, be like, oh, I do qualify for that, good for you. And for the members of the military thing, does that also include the like president's own?
It can, because if you're considered a part of the armed forces, part of the military, if you're in those military bands. So it could include you.
Awesome.
So we talked a bit about this previously in the conversation, but what is a Schedule C and what do I put here?
Yes. Okay. So the Schedule C is where you're going to report your self-employment income or loss. So basically your self-employment income, like I said, anything reported to you on a 1099 NEC, that's going to be self-employment income. Or if you're paid like in cash or on Venmo or Zelle, you might actually get a form from Venmo this year, depending on the type of account. So anything that's, you're paid as a contractor, that's going to go on your gross income on the Schedule C. And then you can put all your business expenses on the Schedule C. Your home office goes there. And the Schedule C is just used to calculate your net self-employment income. So you take your gross earnings less your expenses, and then that's your net income. And that net income number is what you get taxed on, not only for income tax, but for self-employment tax. and that is the 15.3% FICA that we were talking about.
Who can forget?
Yeah. So the Schedule C, you know, it's everyone's gonna have one. If you have self-employment income, you're gonna have a Schedule C. And very important, again, we already talked about record keeping. Keep the records for at least 3 years is my suggestion. But especially, I mean, anything you put on your tax return, you should be able to substantiate. But the Schedule C, obviously, people got a lot of business expenses. A lot of them are going to go there. So just make sure anything you put on there, you have records. You're probably more likely to get audited if you're self-employed, because you're just putting expenses on there and the IRS is going to want to, it's not like when you have a W-2 and your employer's already vouched, yeah, this is what we paid this person.
Yeah, you're right.
You're putting expenses on there that, you know, haven't been reported to the IRS. So that is also why if you're self-employed, you're just generally more likely to get audited. So just, I tell everyone, just be confident that whatever you're putting on your tax return, if you got audited, you could substantiate it, and then you never have to worry, because people get audited. It happens randomly, and you just have to be ready.
Nothing to be ashamed about.
That's
folks.
right. That's right.
What we're saying.
I am very proud of my audit and my response.
I'm proud of you.
That's awesome.
We love auditing here at the Freeway Phil.
Speaking of, if I might get audited, do I still need to claim income from a specific group if I made less than $600 and was not issued a W-2 or a 1099?
So yes, you do have to claim it.
Say
I know everyone, that is a very common question. Yeah, so the rule is, you know, even if you did a gig and they handed you $100 bill and you never heard from them again, you didn't fill out a tax form, they didn't send you a tax form, you are required to report that on your tax return. That would go on your Schedule C, and you know, you have to pay taxes on it. I think the confusion here with the $600 number, because I get that question a lot, the $600 threshold is for the payer. So let's say I hired you to perform for me. If I paid you $500, I don't have to send you a tax form. You have to report it though.
Okay.
But if I paid you $600 or more, then I have to send you a 1099. So it's for the payer, because the 1099 goes to the IRS and to the taxpayer. So if you get a 1099, the IRS got that 1099 and knows, you know.
They know.
And they're expecting you to put that on your tax return. But they're also expecting you to put the cash payments and stuff on your tax return too.
You are required.
You are required.
You heard it here.
Yes.
Pay your taxes.
They see you when you're sleeping. Okay.
Yeah. Don't mess with them.
They hate rich people for not paying their taxes, so you should pay your taxes.
Let's say that I brought a brand spanking new oboe. Can I write off my instrument? Can I write it off? Like, do I have to write it off all in Maggie, or can I write it off over time?
Okay, this is great. Let's talk about this because it's going to apply to a lot of people. So if you, again, this is if you have a Schedule C. If you're purely W-2, then unfortunately, no, you're just sinking that money and you're not going to write it off. But if you have a Schedule C, there are a couple ways you can address an instrument purchase, because an instrument is an asset. It is a depreciable asset. So you can choose to depreciate the cost of the instrument over time. And all that means is you're taking a portion of the total expense on your tax return over a few years. So the depreciable life of a musical instrument is 7 years. So, you know, let's say you buy a, $20,000 instrument, and if you depreciate it over 7 years, that's it. You're going to get a decent little business expense each year. There is something called the Section 179 deduction, which allows you to expense the entire amount of a purchase of an asset like that in the year of purchase. So you could do either, and that's something that it's going to be a personal decision depending on your tax situation. I would talk to your tax preparer to get a second opinion. But, if it's a year that you made a lot of money, maybe you want to deduct the whole thing, you can take the 179. Or, generally, I like depreciating the instrument. Like, it's nice, especially if you don't need the whole deduction in the first year. And then there's a couple ways to depreciate it. You can either depreciate evenly over time, which is called the straight line method. So you just get an even deduction each year. or there is the modified accelerated cost recovery system, and that you depreciate, you get a bigger depreciation deduction in the first few years, and then it gets smaller.
Okay.
So those are kind of your options. So you decide what's better for you, depreciating it over time, or taking the 179 deduction and writing the whole thing off.
Okay. And so you kind of have to keep, if let's say you're doing this yourself, you have to keep in mind, okay, this is the amount that I bought the instrument for. Let's say I take every year, I take some amount of it and, do what we just said. Do you kind of have to be in charge of remembering what you deducted last year or the year before?
I would assume with something like, those third party like TurboTax, like they probably keep track, just like everything else. They would keep track of it for you.
They do. I didn't do this with my instrument because my instrument is 12 years old at this point. But when I bought my iPad that I exclusively use for business in 2021, you can put in like tech equipment that you only use for business and have it depreciate.
Oh, I didn't know that.
Yeah. Okay, so it does track it as
it will track it. It'll be like, hey, we see you claimed this in 2021. Do you still have this? And then it'll just apply the depreciation.
Okay. Yeah. So that, and I mean, still, I would keep track of, I would make sure you have your little record, or TurboTax, it probably makes a little depreciation schedule for you. Just print that out, keep it with your records so that you know for yourself, okay, it's been 3 years now. I have 4 years left of depreciation time on this, just so you know. And then just another thing, like, we don't really have to get into detail on this, but just know depreciating your instrument, if you ever sell it, you've depreciated it as a business expense, you might have a gain, you might have depreciation recapture, so there might be some sort of taxable event if you sell it in the future. So that's just something to keep in mind is, especially if you're depreciating it, just make sure when you sell it, you talk to a tax professional so that you can properly log that on your tax return.
I find like with me and string players that might get quite confusing because our instruments appreciate over time. Like my insurance keeps sending me like notices that are like, hey, your bassoon is suddenly worth $2,000 more than it was last year just because of inflation.
Yep.
Yeah. That's cool.
Yeah. But
sorry, everybody else.
I was like, what's that like? Not applicable. What about percussion equipment? Does it like get
appreciate? That's such a good question. I feel like it really depends on the type of instrument, but also
timpani.
I feel like you get some like nice like half head timpani.
Yeah, I was like, I don't know.
But you would think, I mean, I don't really know if like, because you're changing, like with drums, it's like, okay, you're always changing the head and like
that's what
so
I
it's
was
like the drum itself, does that appreciate?
Yeah, see, these are
talk to your tax professional. Ask them if they know if timpani appreciates.
Yeah. This podcast is for entertainment purposes only.
Honestly, probably have to get it like appraised to find out.
I think so. I mean, do it.
Yeah, I mean, like to get my instrument insured, I had to give them an appraisal, and then they've just been adding appreciation. Since then, so.
Absolutely. Well, you heard it here, folks. I don't know what you heard.
Yeah. Well, speaking of more tax write-offs, a school I teach at charges a nominal fee for facility usage, but when you multiply it by student by 15 weeks, it does add up. Can I claim this on my Schedule C?
Yes, absolutely.
Do I write it off?
Yep, you can write that off. Yep, because that income that you get from the school, that self-employment income that you put on the Schedule C, so any expenses incurred in getting that income, that is a legitimate business expense. So yeah, the facility fee is a legitimate write-off.
We love legitimate write-offs.
Yes.
We hate illegitimate write-offs.
I guess this goes because like the school is actually, they're pretty reasonable about the fee. It's like $1 a lesson per student or something. But I know there's a lot of people who teach at places where they take like half of your
I have heard
instructor fee. So write that off.
Keep track of that. Yes, write it off. Please write that off.
Yeah. Please. I'm begging you. Okay, so let's say like I'm bopping around, I'm gigging Rockford Symphony, Illinois Symphony, throwback. How should I be keeping track of mileage and maybe other vehicle expenses, and how do you write that off?
Okay, this is a big one that everyone should know the basics of. It is a little convoluted, so I'm going to get out my FAQs here because I have examples. Okay, so with mileage, there are two main avenues you can go: the standard per mileage rate or actual expenses, which I can explain more. But no matter whether you use actual or the standard per mile rate, you have to report all three categories of mileage to the IRS. You have to report business miles, commuting miles, and personal miles. So the only type of mile that is actually tax deductible is the business mile. Commuting miles used to be, but Tax Cuts and Jobs Act, again, no. And then personal miles are obviously not deductible. So a business mile would be any mile driven in relation to a 1099 gig. So you drive to or from a 1099 gig, that is a deductible business mile. You're self-employed, you drove to do that gig, that's a business mile. A commuting mile is a mile driven to or from your W-2 job. So you're still driving to work, but that is not a deductible mile because it is related to W-2. And then personal miles, obviously, it's just anything you're driving to groceries or whatever.
Yeah,
all other
to
miles.
The bar, we know you are.
Hopefully not. I don't know. Be careful if you're driving to the bar.
Please don't drink and drive.
Yeah, make responsible decisions.
You know what? That was a terrible example. Forget I said it. Cut.
Maybe you're having some NA beers at the bar. We don't know. We don't know.
So we're in Chicago. It's going to cost you more to park outside of the bar than it would just be to walk there. So just don't drive.
Yeah, that's right. That is true. Take the train, people.
We are not advocating for that. I can't believe that was the example I used.
So funny.
You know where my head's at. But I don't do that. Okay.
So, but it's a personal mile if you drive to the bar, regardless of what happens. So
and don't drink.
So those are the three categories of miles. You have to report all three categories. Not everyone's going to have commuting miles because not everybody has W-2 jobs. Some people are just going to have the business and personal. And so the two options you have as far as how to claim your mileage deduction, there's the IRS standard per mile rate, which is actually quite good because the gas prices are so they adjust it every year. So this year, or 2024, the standard per mile rate is 67 cents a mile. So if you think about like how much of a if you have 1,000 miles, that's going to give you a $670 business tax deduction.
That's pretty nice.
And a lot of people have way more than 1,000 miles out there. Yeah. So the standard per mile, that's pretty easy because you just take the standard 67 cents a mile. That's the 2024 number. And you report your business, commuting, personal, you get the 67 cents per mile based on the business and you're good to go. But for reporting purposes, you still have to put the commuting and personal miles to claim that deduction. The other option is to use actual expenses, which is where you track all of your vehicle related expenses. So like repairs, oil change, gas, things like that. And then you take that total and you multiply it by a fraction, business miles over total miles.
Wow.
So honestly, with musicians, I'm not going to, obviously this isn't a general rule, but I kind of find that the IRS standard per mile generally kind of gives people a better outcome because a lot of times, a lot of your miles are for W-2 gigs. You're driving out to Rockford Symphony and that's a W-2. It's a lot of miles, but it's not deductible miles. So it depends on how much you're driving. Obviously, it's not true for everyone, but just run it both ways or have your tax professional run it both ways and see which one gives you the better deduction.
As somebody who drives a ton, I think the year my Ford died and I had a bunch of auto expenses, I still it was still better just to claim the IRS standard than it was to do actual. And also life hack, because I don't write down on my mileage log how many miles it takes for me to go to the grocery store. So I write down my odometer at the beginning of the year and I write down my odometer at the end of the year. and I have a record of all my business and commuting miles, so I subtract those out, and that gives me my personal miles.
That's amazing. And
Dude, she's so good.
You're so good. And but the odometer thing, that is great. And I would suggest that to everyone, even if you're using an app. There's a lot of apps out there that make it easy. Some people will track it themselves in Excel, which is like more power to you. That's a lot of work. But the odometer is great because then you can prove, if you were in a situation where you did get audited, you could prove, here's my odometer on January 1st and on December 31st. And here's how all of those categories are broken down. So the odometer is great. And then there are apps that will track, you just get in the car and you say, this is a commuting mile, this is a business mile.
Whoa.
And then they create a beautiful report at the end of the year that shows all of your trips, how many miles, and then shows the total commuting, business, personal. Obviously, like, I don't know if you're concerned about data. I don't know about the data and them tracking your.
Oh yeah, no,
maybe
it
so.
sounds
Just
fun.
use your judgment. But there are apps out there that make it very easy if you're just looking for something to help you track. Yeah, so a lot of people use those as well. I would say about the mileage, it is track it as you go, because backing into it is hard. It is a pain. It's one of the more cumbersome. I mean, use an app if you don't want it to be cumbersome, but it can also give you a great tax deduction, and it is legitimate as long as you're tracking it correctly. So it's worth the extra effort, in my opinion. It can save you some money.
That's a lot of money.
And just to expound upon, because I know people are gonna have questions about this, like, there's, as far as miles that are deductible, it can get a little bit confusing in like W-2 versus 1099. So I have some examples here.
Yeah, please.
Okay, so if something with a business mile, it is considered a business mile if you are driving between two places of work. So even though driving from your home to a W-2 job, that's commuting, it's not a business mile, not deductible. But if you drive from one W-2 job to another W-2 job, that is a deductible business trip because you're driving between two places of work. So if you're driving from, I don't know, Rockford Symphony to Illinois Symphony, and they both pay you in W-2, that is a deductible business mile because it's between two places of work. If you drive between a W-2 job and a 1099 gig, that's also a deductible business trip. It involves a 1099. You're driving between two places of work. If you're self-employed and running business-related errands, that's a deductible mile. Some non-deductible miles would be you're driving from your home to a W-2 job, obviously, because that's commuting. If you're driving from your home to any permanent place of work, that is not deductible. So if you're self-employed and you rent an office space and you're driving from your home to that office space, that's not deductible, even though you're self-employed, because you're driving from your home. So there's little rules like that where you might get into a situation where you're like, is this between two places of work? So just be aware there are some tricky ones.
I didn't know that there was any like W-2 room.
Right.
So that's really good to know in the future, though.
Yeah, W-2 to W-2 is the only time where that kind of W-2 rule is a little bit.
Ask your tax
ask your tax professional
how they can help you.
Speaking of when we're out on the road and can't cook meals at home like good millennials, can you explain how meal write-offs work?
Yes. Yeah, so if you're out on the road, again, 1099 related, not W-2 related, then any meals that you buy while you are traveling to that gig, or maybe you're at the gig and you take a break from rehearsal and you have to go get lunch or whatever, those are deductible business meals. And the meals are deductible at 50%. So just keep that in mind as you're not going to get the full tax deduction for that, only 50%, but it's still better than nothing. Yeah. So generally I believe with the software, at least with my software, I would assume that like common self-prepared ones are the same. You're probably going to put the full amount that you paid, and then the software is going to deduct 50%. But just be aware. I would assume that's how
TurboTax did it for me.
Yeah. Okay. So meals are deductible at 50%. Travel meals, audition related, that would count too if you're at an audition. So all of those are legit.
Can I ask, like, if you buy groceries, that doesn't count for this?
Yeah, it's gonna really depend. Like if you're At a
Like if your receipt only showed like on your credit card statement, it shows like Jewel Osco.
well, if you were at an audition and you bought something from Jewel Osco that you were gonna eat for lunch while you were
Yeah.
at a 1099 gig, then that counts. It still is like a meal that you had to buy.
Okay.
So just use your judgment. If you go to Jewel Osco and buy like a 6-pack of beer, like no, you know.
Maybe that's what you have for lunch
No.
because it was a bad audition.
Yeah.
We have a grocery episode coming out soon, and in it I was like, I always, when I'm gigging, I go to the grocery store and I'll get meals and whatever in between rehearsals, right? Like Publix has these famous subs. I won't get into it, but so then that counts, and I just want to make sure as we lead into that episode that people are aware that some of this will
it's a business meal. If you're getting it because you're out and about on a gig, it's a 1099 gig, and you need to buy a meal. Yeah, that's okay. Yeah, that's legit.
So let's talk about, first off, what is a 1098T ? I don't know. And how that affects taxes.
Yeah, so a 1098T is a tax form that you will get from your school, generally from your university or whatever, and it generally shows what the school received from you in tuition, and it will also show if you received any scholarships.
Oh, okay.
And it's just a tax form. It's just like a W-2 showing like, we received this money from you, we gave you this much scholarship. And you can, if you have a 1098T, give it to your tax professional, or if you're doing your own taxes, there's going to be a place to put that into the software. And you might qualify for an education tax credit for some of your tuition expense.
Okay. And so the scholarship itself, is that taxable?
No, generally no, scholarships are not taxable. But the reason, like on the 1098T, you're not going to get a tax credit for tuition paid with scholarship money.
Okay.
You know what I mean? So it's, let's say you paid 20 grand, you got a 10 grand scholarship, then it's going to be that remaining 10 grand that you paid out of pocket that's going to be used to calculate your education credit.
Okay.
So generally scholarships they're not taxable income.
So when I was doing part of a doctorate at Rice, I got, I believe, like a separate stipend from that doctoral fellowship. Is that taxable, like the sort of salary, if you will, from doing the program?
Generally those types of stipends, like the living stipends and stuff, generally they are taxable. But you can always ask your school if you are not sure, and they're going to send you a tax form. Like, I don't know what type of form. So they'll send you a tax form, and that is also going to indicate whether it's taxable or not. A lot of times a living stipend is going to be taxable. You're going to receive a tax form. You're going to have to claim it as income. But if you want to know ahead of time so you're not surprised, it's always good to just ask your counselor at the school or whatever. How is
responsible.
Yeah.
Okay, very good.
We were discussing a little bit earlier when the mics were off. I had a pretty catastrophic shoulder injury a few years ago where I wasn't playing for a bit. And could I have written off these medical bills? And if I had received disability, how does that affect my taxes?
Yeah, so as far as the medical bills, if we move away from, because we talked about, I guess, like I was saying, like, physical therapy is probably a no on your Schedule C unless you have, so if we move away from Schedule C for a second and just talk about general medical expenses, that medical expenses are something that you can claim if you itemize your deductions. So now we're going into a different world. This is not Schedule C anymore. Yes, there is you can take the standard deduction, which is what most people do. Most people are going to benefit from the standard deduction. It is a fixed amount that you get based on your filing status that reduces your taxable income. But if you have enough other expenses that are under that umbrella of itemized deductions, and if all of those expenses add up to be bigger than what your standard deduction could be, you can take the itemized deduction, and that is where you can report medical expenses. The medical expenses thing, It's not as great as people think because you can only deduct the portion of expenses that exceeds 7.5% of your adjusted gross income. So it's going to be like, it would have to be a lot of like pretty high, depending on what your income is, but proportionally high.
Yeah.
And then you could only deduct what's in excess of the 7.5%. So, you know, it's going, you're going to have to make a determination. I would say if you have a bunch of medical bills or something like that, talk to your tax professional, tell them how much you paid in medical expenses and have them help you determine, number one, should I itemize? Do I have enough, I don't know, mortgage interest, charitable donations, state and local things like that that add to it to even itemize in the first place? And then if I do itemize, do any of my medical expenses exceed that threshold?
Wow.
Where I can deduct them?
It is complex.
It's complex. Yeah.
And is that like, now this is like a question that maybe nobody knows because I certainly don't, but does that include like I pay my own medical insurance and then like beyond my standard like deductible that I have to pay, then I have all these extra like medical bills, and are those the bills that we're talking about? Like,
right.
Sorry, this gets really complex because
no, it's good questions because people are going to have the same question. Yeah. So insurance premiums, no, they do not count towards this deducting.
So I pay $1,400 a month for my health insurance, and that doesn't count.
No, unless maybe we could talk about the self-employed health insurance deduction later, separate thing that some people will qualify for than insurance premiums. You could go that route. That's kind of a different thing.
Yeah, we'll save that for your tax professional.
But in this situation, for like itemizing and taking medical expenses, insurance premiums are a no. But anything out of pocket, so prescriptions, out of like co-pays, anything you actually pay out of your pocket, that would count.
Okay.
And you know, there's a list. Also, this is something on the IRS website too. They have a very extensive list, so you could go see
the IRS. Okay.
Yeah, what qualifies.
We'll dig that up. I think that would be very helpful for people. Yeah, I'm like, there's so many like layers of this.
I know
onion.
it's like there's so many like branches. Once you get into the nitty gritty, and then as far as disability, this is another thing. There's a lot of branches. The general thing is going to be sometimes disability is taxable and sometimes it's not. It's going to depend on is it Social Security disability, and then it'll be taxable if you make over a certain amount. If it's a disability that you're getting through, maybe you had disability through your employer or through your insurance that you've paid into, the taxability is going to depend on certain things, like was it pre-tax or after-tax dollars that you paid, you know, so that is something that if you have disability may or may not be taxable. That's definitely something to run the specifics by your tax professional, but you should also get a form for that too. For disability payments.
Yeah, I also want to take the moment to shout out that if you are a union musician, and if you're not, you should be, check with your local to see if they have disability insurance, because I know the CFM does, and it's like $25 a month, gets you, I think it's $250 or $500 a week, which isn't a ton, but it will alleviate some of your stress if something horrible happens to you and you can't for a bit. I wish I had known that, 7 years ago when this happened.
Yeah,
that would have been nice.
Wow, that's really good to know.
Yeah. Another unfortunate thing that a lot of us dealt with during the pandemic, how was unemployment taxed?
Yeah, so unemployment is taxable.
Okay. I didn't know that. I mean, I've never taken it, but I didn't know that.
Yeah, it's just like it's treated like regular income. And you'll get a tax form. You will get a 1099-G. That's for government payments, and that tax form will have, you know, how much you made in unemployment and if any taxes were withheld. So you can, when you sign up for unemployment, you tell them if you want them to withhold taxes or not. So have them withhold taxes.
That's very good.
Yes, and I don't know if it defaults. I'm not sure if it defaults to them withholding tax or not.
Okay.
But that's something you can make sure that taxes are withheld from your unemployment so that you're not left with a surprise at tax time.
I think when I filed, there was a box where I could opt to withhold a percent, and I forget, you could choose like what percentage you want. So you have to know what tax bracket you're in. or what you think you can afford to have withheld.
Awesome.
Another thing where the government scrutinizes every dollar we earn, or in this case, what, if anything, with student loans will affect my taxes?
Yeah, so student loans, you get a deduction for student loan interest paid. So you'll get a tax form from your loan originator provider. It's called the 1098E, not to be confused with the 1098T for tuition. The 1098E is for student loan interest. They're all very similar sounding.
Okay.
But that one is a very simple form. It's just going to show how much interest you paid during the year, and you can put that on your taxes. You get a tax deduction for it. So all good things on your taxes. Not that you have to pay your student loans.
Yeah, it's the fact of life.
Yeah.
I also know a lot of us are holding out for that PSLF. And I've heard that after your 10 or 15-year period, whatever it is, that if you still owe a balance, the remainder of the balance may incur a tax penalty.
Whoa.
Oh, I wonder if what they're referring to, I'm not 100% sure here, but it sounds like you might have to pay tax on, I don't know if this applies to student loans specifically, but like if you get debt discharged, you have to, you get a tax form for that, and it shows like how much debt was forgiven, and you have to pay tax on that as if it was income, because it's basically like money that you don't have to pay back.
Yeah.
So that might be what you've been hearing. It might be a
Sounds
similar
right.
thing.
Definitely check with whoever you're dealing with for this, folks. But it's a good thing to know about. I keep hearing that thrown around in our field, like, oh, like forgiveness after 10 years at a nonprofit. And I'm like, well, what are we actually talking about?
Right.
It's a lot of people who don't know what they're talking about bringing this up. So yeah, we'll have to sort of dig up actual information on that, and maybe find someone who is in the student loan, area sphere. And we'll get that answered for people in the future. But can you explain like any common tax credits that, she and I may not be thinking of, maybe for people who have kids or have a house that they bought?
We are childless cat ladies here, so
yeah 100%.
So I guess like moving away from the music specific stuff, I mean, yes, if you have kids, dependents, then there's the child tax credit, dependent care credit, for paying for care. There's also a number of like low income credits out there, like the earned income tax credit. That's something that, but again, I think that would, for most tax softwares, would probably automatically calculate that based on your income.
Okay.
But yeah, the child tax credit is a big one. Something I referenced earlier, this is more musician focused, the self-employed health insurance deduction. If you're married, you or your spouse, as long as you do not have the option of an employer sponsored health plan, you could qualify for the self-employed health insurance deduction, which basically means you get to deduct what you paid in health insurance premiums.
Okay.
And that would be like a business expense. Basically, if you're Schedule C and you don't have a W-2 job that offers you health insurance, the trick is though, let's say you do have a W-2 job that offers health insurance, but you say no to it and you pay on your own, then you can't take the self-employed health insurance deduction. Or even if you're married and your spouse has a job with insurance that you could sign on to, but you choose not to, then you can't do it. It's truly only for people who they do not have the employer option. They pay, they go, a lot of times you're going to healthcare.gov and you're getting the single payer.
Yeah.
It's those people where that's your only option. You have a Schedule C, you can deduct that. So that's definitely, if you think you might qualify, it's definitely worth asking your tax preparer about, because that can be a good deduction. And the other one I would say a little specific, but there are tax credits for energy efficient home improvements.
I've heard about this.
Yes. But I would say, don't make an improvement just for the tax credit or deduction. And before you do it, if you really are banking on getting the tax credit, make sure you check the IRS website and make sure that whatever you're getting, whatever like appliance, or maybe you're doing an HVAC, there's a lot of different options here. Make sure it complies with the IRS requirements, because you might think you're doing an energy efficient improvement and then it's just not the exact right, like wattage or whatever. There's so many specifics, so check the IRS language on that. But that's a good one if if you're a homeowner and you're making improvements like that.
Okay,
Yeah.
Great.
Out that I was mad that I couldn't get an energy efficient vehicle deduction on the Prius I bought in 2023 because it wasn't a plug-in hybrid.
Ooh. But so it got disallowed, or you thought that you could claim it and then you couldn't?
Yeah, well, yeah. So if you, fun fact, want to buy a fuel efficient vehicle, it has to be at least a plug-in hybrid. It cannot just be the regular hybrid. Prius that does not plug in does not qualify, which is sad.
That is so sad. Yeah, there's little specific things like that because there's also rules about it has to be assembled in North America or I don't remember the specific, but it's like, yeah, there's like, okay, well, it maybe would qualify, but it was assembled in the wrong country so that you don't get it. So there's a lot of specifics. Yeah, check with the people you're buying a car from.
Yeah, check with somebody else. I'll tell you what. Okay, so maybe we should get into some listener specific questions. I do have one here from a fellow oboist. He was asking about a new instrument deduction. We already talked about that. And he also was asking about adding oboe equipment like new shaper tips, like cane, staples, things we use to make reeds, swabs, etc. Can we deduct those?
Yeah, definitely. As long as you have a Schedule C, as long as you're a Schedule C, all of that stuff. Yeah, anything you buy to make your oboe reeds, all of that is legitimate. Okay. Yeah, so that would just be, deducted as a business expense the year it's incurred. And then the oboe, obviously, like we talked about, you can either depreciate it or you can expense the whole thing.
Okay.
Yeah.
Very cool stuff. I mean, I know I have, like, in the past written off a lot of my cane and stuff. I mean, it's very expensive hobby.
Yeah. But not a hobby if you're putting it on your Schedule C. It's a business. Okay?
Let's be clear.
Another question for people who are not me and want to use apps and things. Powerful keeping track of business expenses, write-offs, etc. I use Rocket Money, but always forget when writing things off.
Yeah, I mean, I know there's a lot of apps like Rocket Money that work great for people. So I just tell, if you have a system that works for you, that's the most important thing. You need to make sense of it. And, in the case of an audit, you need to be able to make it make sense to someone else and make it presentable. So, I mean, depending on the scope of how extensive are your business expenses and income, a lot of people have a really good time using Excel or like Google Sheets. You can keep it simple like that.
Yeah.
I don't have any like specific app suggestions, but if you're using a spreadsheet like a Google Sheet or Excel, I would encourage you to like keep it running throughout the year. And then every time you make a purchase, you save that PDF invoice in a folder and you put the date and the amount and the category of expense in your Excel sheet so that it's like running as you go.
Right.
Yeah.
I know that you, Mackenzie, provided us with that Excel sheet. It's in one of the episodes. Is it in episode 1?
It's in episode 1. It's a basic Excel. I didn't want to put all of my financials up for the world to see.
I do believe I deleted some of that information.
Yeah. Okay. So Lauren even simplified it even more. But yeah, it's just a basic Excel of like, I spent this amount of money on concert clothing and I spent this amount of money on cane, and it's all in an Excel.
Yeah. I mean, like, I think what you said actually struck a chord. Music pun. I think that it has to make sense to you and be something that you would do regularly, and it has to be like, make the data pretty to present to somebody else. So it, in the case of me going back through all my credit card statements and highlighting, like, not the greatest method, though I will say that if you live in Chicago and you have a gig in Milwaukee, some of your credit card statements will show you the location of the places that you've purchased things at. So if you download the file of your statement, you can usually see where, now, of course, if it's like Starbucks and it categorizes as Seattle, Washington, like, not as helpful. But some local businesses will show you that they were in Milwaukee, and you're like, I know I was in Milwaukee these dates. Let me look for those. Like, if you need to do it slightly retroactively, I would say, like, at the end of the month, you could put a reminder in your phone saying, I'm going to review everything I did this month, and I'm going to put it in that Excel sheet. And I was in Milwaukee, Madison, whatever, Rockford, but for 1099 stuff. Am I right? Yes, 1099 stuff. So just doing it as sort of like a monthly review might be easier for people than an in the moment if they are forgetful like me.
Yeah.
I don't know.
Yeah, as long as you have a system that works, like maybe you set a reminder in your phone, like once a month or once a week or whatever. You're going in and it's just everyone's brain works differently and everyone organizes their life differently. So as long as it is workable and you get all the required information in the right place, whatever works for you.
That's right.
Yeah.
Just trying to get it done.
Yeah.
Another good listener question: are flights for auditions deductible if your income is mostly teaching? I'm teaching private lessons, like maybe I have a couple one-off 1099 gigs a year. Can I still deduct that flight?
Got it. Yeah. Well, yeah. So for audition specifically, as long as you have a Schedule C, the audition expenses are legitimate because you're searching for work. You're going out and looking for work. So yeah, as long as you have a Schedule C, all of the flights, the hotel, are all deductible.
So that is like across the board. As long as you have Schedule C, you can write off your audition expenses, your hotels, your taxi, your flight, your food, all of that. So that's that was another listener question. Just generally, are audition expenses tax deductible? Yes. Schedule C.
Yes.
Only.
Yes.
Fairly very illuminating stuff on the podcast.
Like if you this is that one wedding gig and you hate wedding gigs, just like take the wedding gig just so you can
that's the key. That's so funny. If there's anything to take away from this episode, take the gig.
Do the wedding. Just do
it. Amazing. Well, thank you
so much, Taylor.
This was fun.
Yes.
We learned so much.
We're so much smarter now.
Where can people find you if they would like to hire you for tax purposes?
Well, you can go to my website, hamptontaxes.com. And I have like a little contact form, so you can fill that out. But yeah, that's where I just do individual tax preparation and like consultation. I could set up a consultation if you like want to do it yourself, but you just like have questions. I could do that. Because I will say it gets busy. I probably stop accepting clients by like early March.
Okay.
Because things get so busy.
I can't imagine. So totally understandable. We'll plug this earlier than that so that people can reach out to you. Everyone who's listening, talk to Taylor if you need any help with your taxes. She is the tax profesh in the room. For once, it's not just me and Mackenzie shouting, consult a tax professional.
We're trying to really be helpful this time, guys.
Yeah, we actually are. And I think you and I had talked about, like, for our listeners, you have a fact sheet, and she's been kind enough to allow us to distribute it to listeners. So we will have that up on the website then, if that's cool with you.
Yeah.
And if you want to read through those and you still have questions, please contact Taylor Hampton, tax professional. Thank you so much again.
Hey, thank you. Thanks
Just another reminder to please rate and review the show wherever you get your podcast and share our show with a friend, especially as we hit tax time and everyone is just as confused as you are. Thank you so much, everybody. We'll see you next time on Freeway Philharmonic.
Yes, bye.
Bye.